All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. On video here, just a little bit earlier than 8:30. A few things to take a look at, talk about, but given what we're seeing in the market right now, I don't expect a ton to change in the next 6 minutes. Let's go and get to it here. And basically, there are no new triggers coming in. I'll show you what's close. I do expect that if the market holds, we'll see a couple here by the close, and I'll show you the ones that are kind of right on the verge there of triggering. Johnson & Johnson, is pretty much just slightly higher than where the stock price, at least, is slightly higher than where we got in yesterday morning. I had quite a few questions come in yesterday, and most of those surrounding Johnson and Johnson. And I guess I shouldn't be surprised, but I was a little bit surprised by some of them. Some of the angst and consternation that comes with it. I understand, right? I totally get the anxiety of a trade, right? This element of I just made a trade and now I'm going to zoom in on the minute chart. I'm going to hyper focus and oh man, it just moved 30 cents. Oh, it went 30 cents my way. Okay. All right. This is going to be great. Oh man, it just moved 40 cents against me. Should I get out? What should I do? Right. And it creates an incredible well of anxiety. And it's an anxiety that is not rational. It's an anxiety that is completely irrational when you look at things, but it's one that most traders experience and most traders go through. It's one where there's some easy ways to turn it off, but for each trader, it's a little bit different. But yesterday, Johnson & Johnson triggered bullish. Okay, great. I go out and make the trade. Did I get the best option price? No, I didn't. Absolutely didn't. Did I know it at the time? Yeah. But the algorithm is about making the trades at that time and not pushing me into it. Or me making decisions of when and how and all of that and trading around it. And why? Well, because when I take a look at the algorithm data, when I take a look at the performance, especially on something like a J&J, the quantitative stats for Johnson & Johnson over the last 3 years are very strong. They're very good. That's the entry and the exit. But one of the things that algorithmic or automated trading does not account for is how a stock gets there. J&J went on a trend right here, right? Right here, in fact, it was a nice bullish signal right on this big up day. And we can look and say, yeah, the stock ran higher. That would have been awesome to run and be on. Most traders, though, would not be on this run. Could not be on this run. Why? Well, take a look. They go and they buy it on a daily signal. They get this nice little breakout. They buy it on the daily signal. They get into an option. And now they zoom in. Now they're watching it close. And you know what? The next day, J&J opened and it went green. And oh man, it reversed and it went red. Uh-oh. What's wrong? It reversed and went red. Okay, please hold, please hold. Okay, it's a little off its lows. Okay. All right, I'll hold it the next day. I'm red, but I'll hold it. And then the next day, stock opens up, and it goes, and man, the option's green now, and then it pulls back into the close, and you're like, okay. Then the next day, it gaps up, and it sells, and you're looking at a trade, you're in it 3 days, and you go, man, this hasn't gone anywhere. Granted, you don't have the benefit of seeing what happens later. And then for most traders, the next day, stock opens and it sells. Look at this tail. See that tail right there? It sells. Trade's got to be dead. Oh man, I hit a 30% loss on my option. I have to take it. All these type of arbitrary things start to come into play. If you do decide to hold it this day, then the next day the stock actually gaps down. You wake up to a gap down. How's that feel? Ugh, man. Yesterday, few, and now it is 1, 2, 3, 4, 5 days of psychological torture on the trade. How many traders, option traders, are going to be able to do that, be able to hold that? Very few. Very few. But yet with the algorithm, right, with the challenge algorithm, it ran here with it until this day right here. It didn't catch the last move, but it caught a good $4 here of it. Didn't get out at the high, didn't get in at the low, but caught $4 of it. Over the course of, 10 days? That's what the algorithm's designed to do. It is absolutely designed this way, to take that angst of, oh my goodness, I got in and now my option's red, and what do I do? And oh man, it gapped down. What do I do? It moved higher, and then the next day what do I do? It's designed to take all of those questions out and go back and take a look at a stock and not ask the question of how does it get there, but what's the probability that it gets there? And putting those probabilities in favor. And doing so with a stock. Take a look at this run. Think about running that. Think about being in that. Think about buying this on this day right here. What are you thinking on this day right here? You're now 6 days into the trade. Your option is about break even here near the lows of that day. You're probably even a little red on it. What are you thinking? Man, this sucks, right? That's kind of the mentality. But overall, nice run emerge? Absolutely. There are some stocks where running trends is a little easier, meaning it's less volatile. It doesn't have as much movement associated with it. But when you go look historically at Johnson & Johnson, there is nothing smooth about runs that J&J goes on. Zero. It's not smooth. It's herky-jerky. It's choppy. I mean, just look right here, and this wasn't a big run that it went on, but just look at this move. Look how choppy and dicey that is. I mean, this one looks pretty easy right here, but look how choppy and dicey it is. Here we have a pretty darn smooth one. That's not very normal for Johnson & Johnson, but even here, big drop in the morning, rally the next day, opens, rally, sells off, right? The algorithm and the challenge is running. There's nothing in it on how a stock gets there. If I thought for a moment that I could make that happen, that I could put together some sort of algorithm to say, hey, you know what? Give me a signal. Give me a signal only on stocks when they're about to move up and they're just going to go up. They're not going to have any dips. They're not going to have any volatility. They're not going to have any variance. Just the ones that are really smooth moving. If I thought for a second I could do that, I would. But, yeah. Right, there's no chance. Right, occasionally it happens, and when it happens, man, it's nice. It is nice, but the majority of the time, for the majority of stocks, it's a herky-jerky type of back and forth element. And what do options do? What does applying options to it do? It amplifies that element to a much greater degree. And it brings in some kind of some methodologies or mentalities that, let's face it, are pretty ridiculous, but are known as market wisdoms or market certainties. But when you really break them on down, they're pretty ridiculous when it comes to it. Okay, so I bring that up with J&J just because it's going to be a wild ride. right? It's going to be a wild ride. It always is. I've never traded J&J without it being a wild ride. And, ultimately, the bull signal's here, and, it may stop out, and we may be looking at the stock. In fact, where's the stock exit level? 136.65. We may be talking about J&J getting to 166.35 and having to get on out. But you see the cushion that has. It has a pretty good cushion on it, and it's because the average true range on the stock is actually pretty high, right? Especially when you compare it to something like a Procter and Gamble or something of that nature here with J&J. So, where can it go? Obviously it is something where the average true range, two average true range takes it to 142.5, and so that's kind of where I'm looking at, which is kind of right up here near the highs from earlier this month. And, hopefully it gets there. We're able to take some off and let the rest ride and let it go to hit new highs and fully fill this kind of monstrosity of a gap that it saw back here in December. But anyway, that's J&J. Hopefully that answers some of the questions that came in here on it. But look, I've never trading options is not a smooth game unless you're day trading fun. Day trading's a whole different story. Micro day trading, playing the gap and what's going to happen tomorrow. That's a total different trade. That's a whole total different style. That's a whole different set of rules, circumstances, and elements associated here with it. So, I'm not speaking to day trading. I'm speaking to option swing trading in the way that the challenge is set up. I'm not speaking to investing either, because from an investing standpoint, you have to be able to zoom out, even more and let even more of the variances just kind of roll off and not really matter. Okay. All right. So basically, with J&J, no change to be made here this morning. Let's take a look at where the option is here. Probably about break even. Yeah, up $10. Great. 207. Yeah, great. All right. Let's see. 207 here. Great. $10. Not gonna get very far here with that. And you'll notice, the stock's higher, right? Stock's higher than it was when we entered yesterday. But what's lower? The implied volatility. Right. We saw the implied volatility on the options really shrink as the stock rallied yesterday into the close. We saw that IV drop, and that's just one of the risks of trading calls, right? You're going to get IV drops, and, when we look at the VIX here, the VIX here today, we do see a little bit of a drop. Stock charts isn't giving it, but you can see the VIX down $1.12 here today. So it's it's one where J&J, that's what we're seeing. It's not time decay. It is implied volatility contraction here on it, which is just one of the things that affects at the money or out of the money options or first strike in the money. But as it moves, the implied volatility has less and less of an effect, and the delta really takes over there. Okay. No new signals here today, as I mentioned, but many that are getting close. Many that are getting close here. Before we go take a look at them all, was asked about Chipotle. Chipotle had the bullish signal right back here, and it's still going. There's nothing. There's nothing bearish. I know it sold off into the close yesterday, and all of that, but it is still on that bullish mode, bullish trend. Personally, how I look at Chipotle, and my bullishness on Chipotle is very bullish, but anyway, that's there's nothing there technically here with it that's changing on it here today. Now, if we just go take a look at all the stocks in the challenge watch list, we're going to notice a few things, right? That on any given day, there are about 75 to 80% of the stocks that have no chance of signaling. Zero chance of giving any sort of trigger. Why? Well, here's Alcoa. Take a look at the 3-day moving average and the 7-day moving average. They're already in a bearish position, so we're not going to get a fresh 3-7 crossover to the downside. If we get a fresh 3-7 crossover to the upside, and the algorithm is based on these crossovers, it doesn't have to be absolutely perfect and exact on the crossover, but it's based on these crossovers. An upside isn't really going to trigger a bull signal if it's happening off a new low for the stock, right? The chance of going on a monster upward trend off of a new low is very slim. It happens, but the probability of it is very slim. So we're not anywhere close to getting a fresh bullish signal, and we're not anywhere close to a fresh bearish signal here with Alcoa. And on any given day, that's 75 to 80% of the stocks. This is the position that they're in. Here's American Airlines. It's kind of in that same position, right? This would be a higher low if it set it. So if we saw kind of a 3-7 crossover come in, it may trigger, right? It may trigger. But, something like Apple, it hit a new low yesterday. Fine, we get a 3-7 crossover. It's not going to trigger. It's not going to be a bullish trigger. What do we need? We need to see some rally and then a pullback, and then kind of that next a little rally come into play. That kind of higher low element, like right back here, where the stock comes off the lows, pulls on back, gets the next 3-7 crossover, then the chance of moving on higher is increased there. With it. It doesn't mean the stock can't move higher, or anything like that, but that's what we need to see. Here's Amazon. Amazon triggered bullish right here. And it's pulled on back, and it's hit the stop points and everything. It is something that could be bearish by the end of the day here today. You can see where the Stochk 50 is, right? We have a kind of a failed bull signal, and it is a little more common than uncommon to see failed signals actually push the other way in a significant manner. Here's Arconic. This is one that could be bullish by the end of the day. Has the 3-7 crossover going on, higher lows happening. It's a beautiful chart, here for Arconic, and one that could be a bullish signal here today. One who's, you see the average true range on it's actually going down. Not a lot of stocks in the market that are doing that right now. Here's Boeing. Boeing had a 3-7 crossover here on Friday, but coming off of a lower low or a new short-term low, this first bounce isn't going to trigger a signal. We'd have to see some sort of pullback and rebound rally to get an upside signal there with that. Alibaba, this thing had the upside signal right here, then had the gap reversed, and it has been nothing but sell pressure for it. Even though it's held up better than some of its counterparts, there's no new trend forming. The trend is in. Here's Bank of America. This one's really interesting to me. You can kind of see how the 3 and 7 are starting to act right here, and this is off of a higher low if it were to cross, right? But you see how far it is from that 20-day moving average. It's pretty far there with it. Oftentimes with something like this, we'll get a bounce back to that 20-day moving average. But this is one I'm not sure if that next 3-7 crossover would trigger or not. But does have that potential to happen, but it's not going to happen here today. Here's Bristol Myers, triggered bullish last week. Sold off a little with the market, bouncing a little today. Still in that mode. Here's Caterpillar. This looks like a lot of others, Apple, FCX, right? Nowhere close to any sort of trigger. So what stocks are? Chipotle's already in a bullish run, bullish trigger. What stocks are close to a bullish trigger? Take a look at Conoco. Here we have that first 3-7 cross, rallying. This is something where if it were to pull on back, set a little bit of a higher low, and then rally, great, get a bull signal. You'll notice the 39.1 is well below 50 here. And so, don't normally get bullish signals in that area. But here's CSX. This is one where the 39.1 is above 50. The 3-7 crossover would be coming off of a higher low. And this morning it was showing a little bit of that crossover happening. Didn't get a bullish signal yet. I do believe we need to see it break about 78.60 in order to get the bullish signal. So we'll see if that comes in. If it does, we'll run with it. Right now, the algorithm, just the consolidation risk is too high here with it. But it's one that's close. This is one of my favorite charts out there, Chevron. Nice consolidation, finally breaking 121. If it's able to hold above 121, it's a nice signal. But you'll notice that it's not a fresh 3-7 crossover, right? The 3-7 crossover came on the news gap that they're done bidding for Oxy and or bidding for Anadarko, trying to go against Oxy. So it's not a fresh 3-7 crossover for a signal to come in, but still a chart I really like. Some of these airlines could get interesting, like a Delta, potentially coming off of a higher low, in the nice stochastics area. So we'll see. They're with it. Triple D, not even close. Disney, not even close here. EOG Resources. I was very surprised on Friday that we didn't get a bearish signal on EOG Resources. I was very surprised. I thought for sure that was going to be a bear signal here on it. It was a 3-7 downside crossover, but it did not trigger. The consolidation risk was too high, and this is one that could potentially trigger to the upside. Now, what's interesting is it could potentially trigger to the upside, but you've heard me repeat over and over that they need to kind of be above 50 on the stochastics. But this is one where, when I look at the algorithm data, could trigger just sub 50. May not have to be above 50 there with it. Facebook. This is one. The next 3-7 crossover is almost for sure a bullish signal. Almost for sure. But we don't have that 3-7 crossover here just yet, coming into play. So, the CSX, Facebook, EOG getting close, something like a FedEx, nowhere near. Gold, nowhere near. A signal. Barrick, nowhere near. Most of them, a Halliburton, not even close. Home Depot earnings today, but, even if it weren't earnings, not even close there with it. Honeywell, you'll notice this stock looks similar to a Facebook, looks similar to a CSX, right? This is one that could easily trigger by the end of the day here today. You'll notice it does have a 3-7 crossover going on right here at this moment. It wasn't when I jumped on video, but it is right now. You can see it, but anyway, it's there. And then, the one that I thought for sure was going to trigger today was IBM. And it has the 3-7 crossover, and it could trigger by the end of the day. You'll notice where the 3-7 stochastics is. It's not above 50, but this is in a similar situation to EOG. And so, it's one that could easily trigger by the end of the day. But anyway, you can kind of see where things are. JD could trigger here soon. Probably not today, but the next 3-7 crossover would most likely be a bullish signal. So would get the chance to jump back into there and trade that. You see J&J, has the 3-7 crossover on it here today, and we're already in it. But, you can just kind of see there are some that are getting very close. JP Morgan, almost identical chart to J&J, right? But some that are getting very close, others that are just nowhere near, right? Here's Coca-Cola, has a downside 3-7 crossover, but it's coming off a new short-term high. To get a big downward trend off that typically isn't what we see there with it. Okay, so hopefully that helps to kind of see where some of these are. I was asked about MGM yesterday, and is this going to trigger bearish with the downside 3-7 crossover? It didn't. It didn't trigger bearish, and big rebound here today. And one of the reasons it won't trigger bearish on a move, even though it gives everything from a visual standpoint, is because when the algorithm runs, it looks at past history. And it looks at these types of moves in the past on percentage basis, and it says, okay, you know what? In the past, high probability or low probability that there's follow-through, and this one was a very low probability. They're with it. Altria, this is one I thought for sure was going to trigger bullish yesterday, but sold off into the close, wasn't able to rebound. It's showing the algorithm is suggesting that it's ready for a trend, ready for a big move, but it's one that hasn't filtered out the direction here just yet with Altria. So nothing really to trade there with it. Okay. All right, so hopefully that helps. Just going through some of these, kind of seeing where they're at. Nike could trigger bearish by the end of the day here today. It does have that fresh 3-7 downside crossover, but did not have the trigger on it here this morning. Okay, so that's the majority of the stocks in the watch list, and you can just kind of see that 75 to 80%. No chance the other. Definite chance of triggering, and we'll kind of see where things end up. Here today, as far as the overall market and kind of how things are sitting. If you look at, we talked about this kind of channel yesterday, and I'll draw it here with this kind of channel element, and coming on down, setting a higher low, right? And didn't come all the way down to the low side of the channel, and that's actually more bullish than bearish, right? Not coming all the way back down to the low side is definitely more bullish than bearish, but we have a market where over the last week and a half, we're now talking about higher lows coming into play. Higher lows, and we've actually seen a few higher highs. So this bearish element of kind of 2 weeks where the market sell rallies, we're starting to see it switch back a little bit into some buy dips, and seeing that change happening. The last chart I want to leave you with is the actual SPY chart. We talk about the algorithm needing a couple things to trigger bullish. Well, what's it need? It needs a 3-7 crossover to the upside. Well, almost. I think the market would have to rally another 2 to 3 points to make that happen today. So it's pretty darn close. And then we need to see it trading above 50 here on the Stowe 39.1 most of the time. And in this case, it needs that, to come in. But here you can see that higher low element, starting to play. And so, yes, there's still a lower high element in play here for it. But this is one that could easily be a bullish trigger here by the end of the day. Now, I won't place buy for the challenge unless I get the algorithm trigger and the market vibe trigger here come in at the same time. And we're not seeing much movement in the market vibe here this morning, at least before I jumped on video. Here you can see bullish percent index, almost no change in it here today. Pretty dry. If you look at small cap performance, though, it's up 1.3%. Outperforming the SPY nicely here today. The Qs here outperforming as they're the big bouncer, after yesterday's rout. All right. Thanks for hopping on. Have yourselves a great one, and we'll talk to you later. Take care.